Hello, YouTube. Today we're going to talk about buying the dip and whether it's going to keep working because every time we touch our uptrend, what do? Well, we bounce. So is this time different? Is the buy the dip going to keep working? Stay tuned. And in today's video, we're going to go through all of that. But what I want to do first is actually identify a key area here that I noticed there was a push pull happening with all day. Notably, it is the level that actually signifies the big flush down. We got into Friday, June 16th. And if we look here on a 15-minute chart, what did we do? Oh, my goodness. We open up right on that area, almost to the cent. We're looking at 439.41. I'm looking for 0.36. And then the bears come in. They slam it down. The bulls buy it up, and we get that reversal or a Nike swoosh and just doing it. So I think we want to provide an update to Tesla and other names because that is the pattern that we have been noticing. There was a lot of selling here into the open, but the bulls bid it up, they bought it up, and they closed it right around the high of the day after penetrating 440. So after we lost this consolidation box here that we were looking at, we've now filled our lower gap. That's now a check. So we filled this gap, filled this one here. Are we now going to make it all the way back up here to roughly 442 and fill that gap? That's about another 0.5%. And this will be important because we are set to close the weekly candle out. And as a reminder, if we look here to our notes, hollow candle signal the expansion is continuing. Lower lows is a warning. Well, we don't yet have a lower low, but we have a full inside bar. So an inside bar that is not hollow, it just means that we're consolidating, but we're consolidating with defense. So something I've been trying to say frequently is whether we are doing a defense or offense. And I think it's pretty obvious that on the daily chart, we're pointing up, we're over 432 or that key pivot. We got a weekly bounce here off of our high here going to December 20th. June 20th. My apologies. And this is exactly what we would expect. We're in a bull market, which means 20% off the lows. We're pointing up. We're over the 50 MA. We're over the 200 MA, and we have an inside bar. But these bears are going to say, oh, that's it. It's over. It is time to sell. With a shortened trading week, I think it's going to be very important where we close this weekly candle out. Why? Because we know that where the candle closes will usually lead to continuation of the pattern. And right now, we're wondering whether or not we're going to get a slam down here to 432 or our strong uptrend, our August high from 2022, or if we can form a hammer into the end of the week and then go for new highs. That is right. And I did a poll. I'm actually really curious what those numbers are. So if you guys wouldn't mind, please smashing that thumbs up and subscribing to the channel. I would greatly appreciate that. So what I'm going to do is actually pop over here to our, oh, that's right. Here's those bears, right? Here we go. So I asked, I did a poll about an hour ago, and I just asked, do you think the next 5% move is going to be up, which would be 462, or down to 418? And it looks like 6 out of 10 people still vote down. They thought the market would be up this week, but not 5%. That is asking for too much, which means that maybe they kind of missed the boat here because the market is in extreme greed from over a month ago. But what is missing here, in my opinion, is that higher high. I think we got over that 82 area, but we didn't quite hold it. So what's so interesting is that with a pretty broad-based red day, and Apple flirting back and forth with that $3 trillion value, currently at 3.01, it held it. So come on, timeline, work for me, please. So there's a few things that are quite missing here. And if this stupid timeline, it's not going to load anyway. So we want to see us over 82. And as we look at that heat map, what we want to keep in mind is that the tech-led stock rally is missing some exuberance, right? That's from Alan Greenspan from the 1990s, that irrational exuberance. Bets on unprofitable companies are tamer than usual, signaling tempered zeal for equities. So what does that mean? It means companies that have AI, like the small cap tech companies, if it's a tech-led rally, they should be participating. So here's the Goldman Sachs non-profitable tech basket versus the NASDAQ, and we can note that, man, these things are really sagging. They look like the classic psychology chart where the unprofitable are left in the dust and these big tech leaders are pumping higher. The losses are also piling up, as we can note here. So that's the most important thing I want to go through. It's really just that we're failing to see that breadth, the risk spectrum. And all that means is that if people are willing to buy QQQ, they're willing to buy Bitcoin, well, why are they willing to buy ARK or a thing like a GTech? So here we look at BTC, had a pretty nice move, nice bull pivot off of 25K. And then when we look over here to ARC, man, it's really struggling. So it's over its 50 MA, but oof, right? This has been a rough ride. Everything in her basket has been beaten up. But what's so interesting here, let me actually double check. 45, 46, 45, 43, it failed. High, lower, high, lower, high. So it didn't quite make it to that higher high, but here we have low, higher, low. Where are we going to stage that higher low on ARC? So we just looked at that article. I think this is going to be very interesting because what this pattern basically tells us is that we're getting really close to resistance, but we're really forming a triangle. So the triangle tells us that lower highs, higher lows. We look here at the volume. It's mostly green, but like, why is it no going big up? Why no big booms? I'm looking here to GTech, which is very similar to ARC. It's just a future tech leaders ETF. Not the same one as we looked at, but this one looks better. It's actually flagging over this area, which means it's all the way back to where it was in August of 22. So let's take a quick step back in time. Why? Well, because this 432 area here means that we've actually gone over to a new 52-week high. And as we noted on that article we just looked at, ARC is not. ARC would have to make it up here to about 53 or about $10 higher. It is not there. So part of that recipe is missing. If we look over here to GTech, is this just an ARC story? Well, this one's a lot closer. It has to rally up by about another $1 to make it a 26, 27-ish. But if you look over here to Bitcoin one more time, let's go to the Coinbase one. Where's our August high? There's our August high. It's all the way down here at 25K, and that is almost exactly where we just bounced off recently. So what? Let me just blow this chart up a little bit. This also looks like the classic psychology chart, which is what I've been using this for. So what was so interesting to me is that we had this pattern here, which I got a little bit of FUD, right? Fear, uncertainty, doubt, because I was using Binance as my broker. And I'm like, man, get me out of here. I got a little bit in Coinbase, but definitely not as much as before. We have this uptrend here. We note that when we got a violation of it, which means we fell below the uptrend, what happened? We fall below. We get 1, 2, 3 bouts of volume. So we get 3 big waves of volume, 1, 2, 3. And on the third one, it climaxes, and then we go big, big up. So Bitcoin has that same pattern here where it started at about 15K and it has now doubled to 30. So what this pattern tells us is that, well, if the rally's real, Bitcoin looks like it's ready to go. It's right near 52-week highs. So is the market. So is the NASDAQ. So does that just mean people prefer Bitcoin over non-profitable growth? Drop me a comment and tell me what you think, please, and thank you. All right, and thank you very much for your patience yesterday. I did not put a video out. I just had something I had to deal with, and here we are. We're back to our normal schedule. This is part of what led the market lower today. So we can look at the data here in a moment from the US, but we actually opened up pretty soft. So the reason why we got that gap down on SPY, which we'll circle back and talk about in a moment, and on QQQ, was that JP Morgan sees risks of a 7% interest rate hike and a hard landing in the UK. So we're talking about 5% right now in the US. I believe the Bank of Canada goes next week, and they're largely expected to go another 25 basis points. So that fear surfaced in the market again. But like we mentioned here on the fear and greed, at the end of the day, even though we're closing red, we're right here at 79 or a track versus yesterday and also versus a week ago. And we're higher than a month ago. What does that mean? The squeeze continues. But we're not seeing that breadth or depth into the small cap names that are unprofitable that we would expect at this stage in the cycle. So we don't have to read much beyond this headline. It's a scary one, right? 7% interest. That's also where the Taylor rule says the US should be right now. But every person has a different indicator they like to look at. And the hard landing is the thing that people are focusing on here. So if you look to the data that came out today, this is what got the market a little bit scared. We look here to the ADP non-farm payroll, came in with 500,000. Unbelievably strong. The problem here is that good data is good, but excellent data is bad. So this number is really strong. And when we think about going to 7%, what this basically means is that the Fed, if tomorrow we also get a very strong non-farm payroll, that would imply that people are expecting, again, keyword there being expecting, that we're going to be seeing an even higher number from the Fed. Why would that be bad? Well, it would be bad because it means the market hasn't quite priced it in yet. We note that that whipsaw into the day, and then we finally flushed it out, which means that we got a dip down, then we rallied up. I was trying to find the other number, but Bloomberg actually has this number coming down here to 3.6 and roughly 200K for that headline non-farm payroll number. So that's really what it comes down to. Pre-market tomorrow at 8:30, there's going to be fireworks. This is a monthly report. This is going to be a look back to June, and it's going to be widely tracked. So as we look here to S&P now on our one-day chart, we'll pop over here to QQQ as well. We're building momentum. We've bounced off our uptrend. We need to see continuation, which means a higher high tomorrow. Otherwise, if we fizzle out here, there is a risk we could start going down. Where? Maybe back down to fill this lower gap. Maybe we go up to fill our upper gap and then we sell. I'm not sure. If the market is truly in fear mode, well, we're not seeing that on the tape. They bought it up. So we have this upper gap here too. I want to see what happens here. Do we get up here and do they sell it? Gap downs are generally for buying. This was no exception. It's a nice lower tail. We got a test down here to 437. And if you look here at QQQ, again, we noted that supply pocket. We were looking at it roughly 430. Let me double check what the number was. It was the opening price, 439.50, or that low going back to, the close on Friday the 16th. Let's go to QQQ. That closing price here is 36793. Where did we close today? 36746. So that basically the exact same thing is happening here. This low going back to the 16th corresponds with the gap. The gap has now been filled, and we have a small upside gap here on QQQ. It also got a perfect save on the uptrend. Bounce, 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 and bounce. So that's what the bulls want to see. What the bears want to see is for us to stop going up, to be honest. Here we got a higher high, which will mean we have a higher high on the monthly and on the weekly, but now it's a failed breakout. But we're only down by about $2 or about 0.5%. All right. So the last things for us to look at here are going to be, let's pop over here to Tesla, because we talked about that one on Tuesday before I left. I actually didn't even check and see what the price was. So with that Threads thing coming out, we can note that Tesla and Meta have been quite strong this week. Big gap up here for Tesla. Let's show you actually on the heat map and make sure that we're making this very clear. Looking to a week ago, performance on a 1 day. Everything's red. Let's go performance on a 1 week. Everything's green. So that's not what it looked like before. Let me just see here if I can go to last 4 hours. So this is a much better representation of what I wanted to show here. On the day, we can note that it's mostly red, but most of those losses came in at the open for the first 4 hours, because after lunch, we didn't do anything. We went sideways, which means the bears blinked and the bulls punched them in the balls. So we look here to Tesla, and we talked about this key area here. I don't love this candle, but it can fix it into Friday. The reason why I don't love it is because it's a lower low, a lower high, and we had an inside bar yesterday, which means consolidation over our resistance. We got a nice lower tail here, but it did close below yesterday's low at 277.6, and it also closed right around, but just slightly below, 276.99, which is that high from the big pump. So what does that mean? It means Tesla's starting to have a little bit of weakness. It could lead to a gap fill here. I think there's a lot of push-pull happening between Meta and Facebook. And this might, again, keyword here being might. I've been saying Meta might be overbought for a while now, but it might be a buy the hype, sell the news. Thread by Meta, or their Twitter rival, had a huge amount of downloads. I think it was 10 million in the first couple of hours. But man, just do it, baby. Is it going to do it even more? Is it going to go up even more? I encourage you to watch our weekend deep dive, which is now queued up here on the left-hand side. If not, I encourage you to come for our live stream tomorrow for the final hour. We will take you through everything you need to know. So if you haven't already, I encourage you to subscribe to the channel and come back tomorrow. Thank you again, and I wish you all the best of luck into the end of the week.